What is up, traders? What's up, tycoons? Did you guys know that stocks can predict who will win the election in November? Now, we'll go over that and show it to you guys so you guys can see the actual facts. All right. And then we'll just break down some other really interesting data in today's video. We'll go over election years, the performance in election years. We'll take a look at some different metrics under new presidents in case we get a new president. All right. And just really break down a lot of the facts, right? We'll talk about the fourth year of a new president, which, Biden is in his fourth year. We'll talk about lame duck election years. All right. And some of the results, after a red midterm year, which is what we had in 2022, which was a, bear market in the midterm cycle. All right. A lot of this election data I really, really have enjoyed and really started actually relying on a lot more ever since the bear market of 2022. The midterm election data literally predicted the bottom in October of 2022. And ever since then, I've taken these stats a lot more seriously. Okay. So they're not things to live or die by, but they are very worthy of, noting and paying attention to, which is why I'm making this video for you guys today. As you can see, lots of data that we're going to go over. I think you guys are really going to enjoy some of this data. And, maybe you're not the best at technical analysis. Maybe you're not the best at fundamental analysis. A lot of this type of data, which shout out to Ryan Dietrich at Carson, right? He's the one that made most of the slides that we're looking at in today's video. This is really great research that I like to follow, and he's someone that I definitely think you guys should follow. Follow Carson Investment, and check out some of their research. And if you don't want to, that's fine. I'm sharing a lot of the video for you guys, or a lot of the info in today's video for you guys. So it's going to be a really good one. Be sure to smash that like button, subscribe to the channel if you guys are new. But as always, the content provided on the channel is for informational and educational purposes only. It's not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're actually new to the channel, I started my own newsletter called Investment Intelligence, giving out free, valuable finance content. And I also try to sprinkle in a free trade idea every single week for you guys. Now, this is what the trade ideas will look like, highlighting the conditions on the chart and then showing you guys the actual chart itself, right? So you can see the chart, and maybe if you can't understand what you're looking at, I'm breaking it down, going over everything that I'm looking at that's important, identifying these high quality setups. Now, there's also a website associated with it. And remember, it's completely free. So you guys can read the website, go back and check out some of the previous newsletters. And if it's something that you guys want sent directly to you, you can sign up for that. All right. There's a link in the description. There's also a link in the description for the Investment Intelligence Discord, which is only $10 a month. I see a lot of other YouTubers charging like $50, $100 a month or even more. Try to make mine very reasonably priced, so that way it's easy for you guys to get in. And this is where I'm posting all my different analysis, all my different trade ideas. There's many other valuable resources in, custom scripts, indicators. There's a stock bot in there. And in there, you can actually see gamma levels, dark pool levels. You can look up recent politician trading. There's so many features inside of the Discord that I think you guys will enjoy. This is one of the recent trade ideas from the past week or two. I'm posting 20 plus swing trade ideas every single week in there. And iClean was one of them. This is a clean energy ETF. Very nice setup here. And you can see the option returns on that were very nice. Took profit on a lot of those today. All right. Intel was another one, breaking down the trade idea on Intel, talking about the large order block that came in over the past week or two. There was about a 1.5 million share block that came in, and it was right at this key zone that we had retested 5 times previously as support. And Intel also did very, very nice. Was able to take some profits on those there as well. So sign up for that. Link is in the description. That's only $10 a month, or you guys can sign up for the newsletter, which is completely free. All right, now let's get into the video and talk about, how the stock market can predict who's going to win the election. So as you guys can see, the title of this slide, stocks can predict who will win in November. Now, specifically what you're looking for is the S&P 500 returns 3 months before the presidential election matter. All right. Now, 20 out of 24 times the stock market has been correct. Now, what do we mean by correct? Well, if the stock market is positive, all right, then it's basically saying that the stock market is right. okay? And you're looking at the incumbent party winning. Now, the incumbent party has lost, many times when it's been a no here, okay? And so 20 out of 24 times, the stock market has been right. So really, really interesting here. I like to find this data and look at this data, and it's very interesting to me, in my opinion. Okay, so that's kind of why I wanted to start the video off with this, and then we'll dive into what I think is a little bit more important, honestly, rather than predicting who's going to win the election. All right, is going to be some of the historical returns, okay, via different election year seasonality and cycles. Now, election years tend to be weak early and rally late. Now, the internet has changed a lot of investing, okay? And what I mean by that is, back in the day, people had to do this by hand, okay? And it wasn't accessible via social media. There weren't newsletters, right? There weren't blogs. There wasn't Twitter and FinTwit and all these different things to easily access all of this information. And so, being that election years tend to be weak early, we've actually seen the exact opposite of that. Okay. January and February have continued ripping. The stock market literally just made new all-time highs this past Friday, and we're seeing it continue to rip. Okay. Now, does that mean that, this isn't going to be true and that we can't rally late into the year? No, it doesn't. All right. But it's just showing you this is typically what happens, right? And so normally you kind of consolidate for the first 4 months of the year and then you start to rally. But we've really been rallying, the first 2 months and starting off early March, continuing to rally. So on average, you're looking at about 7.3% returns. The S&P 500 already hit that. Okay. Q1 of an election year tends to be weak, but later is strong. So this is a little bit more of a bar chart versus a line graph. All right. And a line chart. This is kind of just showing you, hey, year one, Q1 is not the greatest. And then you start to see better returns towards the later half of the year, right? Then these are year 3, year 4, etc., right? But we're looking at, right now, Q4 of an election year. So that would actually be right over here. Year 4, Q1, you can see on average is 0.2% returns. And then from there, you're looking at 2.8, 1.5, and 2.5. So, Q2 and Q4 typically are the strongest in this seasonality, right? Which it makes a lot of sense when you just look at seasonality overall. Generally, February is one of the worst months for tech, as well as September or October. So though that comes in Q1 and then that also comes in Q3. So it makes sense that the heavy tech weighted index like the S&P 500 would see a little bit less stellar returns in Q1 and Q3 if some of the worst months are in those quarters. All right. Now, under new presidents, stocks underperformed early and then they improved later. Okay. And so if you look at year 4, which is where we're at right now, the middle of the year tends to be really, really nice gains. Okay. We're looking at 12.2% returns with the later half of the year being at 7.3%. So these are really, really nice. And remember, if we get a new president, we're going to be looking over here for year 1, right? And it's really, really nice in the beginning of the year for year 1. So, if we were to have a new president win, these are some things that you want to take in consideration, right? We're in year 4 of a new president right now. And then if we get a new president over here, next year, then this is some data that you're going to want to pay attention to, right? And it looks very, very good here as well if we were to get a new president. Now, stocks have never been lower in an election year under a new president, right? When you take a look, you have Joe Biden there in 2020, right? First year, 26% returns, midterm year, negative 19% returns. That was that famous, Fed-induced interest rate bear market that we had. All right. Then the pre-election year 2023 was stellar returns, 24%. And, election year, 100% of the time has been green. Okay. Now you can see it gets down as low as 1.4%, but we've had anywhere from up to 25 and 20% returns here as well. The way the stock market is booming right now, I wouldn't be surprised if we were to get 14 to 20% or more, for the total year. Okay. Call me crazy, whatever you want. but that's how things are developing right now, right? I'm free to change my opinion as time develops further in the future. That's what's great about being in America, is we don't live in a communist country, right? Where you can have an opinion, change your mind. But I don't want to focus too much on my opinions in this video and really just go over data and facts. And if you're a bear this year, it's really hard to argue with this data set. I mean, 100% of the time, we're green. Okay. Does that mean that we can't go down 3% for the rest of the year and still end the year green? Yeah, that could happen. But, that's much different than, some big crash that everyone's trying to predict or that a lot of bears are trying to tell you is going to happen. The stats just don't look great, right? I've gone over many other statistics, many other metrics. In today's video is really just highlighting, the presidents and the elections and how they tend to impact the stock market. So, I mean, it looks good for the bulls, right? Over the next 6 to 12 months. Now, shorter term, who knows? Stock market could start correcting any day now. We could see a 5 to 10% pullback, right? Now, the fourth year of a new president tends to see most of the gains later. We kind of touched on this a little bit later. A lot of this presidential election year cycle data suggests that the later half of the year is going to be strong, right? And we've talked about what a strong beginning of the year that we've had. I mentioned that, hey, maybe we correct. Okay, maybe we see some type of correction. If we do, that could potentially set up for some really nice gains towards the end of the year and towards the later half of the year. Now, stocks don't like lame duck election years, so good thing 2024 isn't one, right? In blue, we have the fourth year lame duck, and you can see that the results are much different than the fourth year of a new president, right? The fourth year of a new president is actually positive, and the fourth year lame duck is actually negative, very, very slightly, but still negative overall. Now, you can see what most of these have in common, all right, is that right around this period here from April to August, okay, is kind of when you start to see some consistent gains, all right, periodically in the market. And I mentioned how February, typically isn't the greatest for tech, and also either sometimes September or October, and you see pullbacks in both of those during that time. So this summer and spring heading into summer looks like via some of this data, like we should see some pretty nice returns in the market. Oftentimes the first quarter isn't the greatest, and we've had a really great first quarter. So maybe things are backwards, right? And maybe the second quarter isn't as hot as it typically normally is, just as the first quarter was way hotter than it typically normally is. Now, election years have never been lower after a red midterm year. And so we talked about how 2022 was that bear market, was that, Fed-induced interest rate bear market that we had, right? And when you take a look here, 100% of the time, again, whether it's a Democrat, whether it's a Republican, we are green, all right? The stock market is green. And they even go as far as to break it down by Democrats and Republicans. And the median Republican results are 15.8%, with the average Republican results being 12.9. And then the median Democrat and the average Democrat is basically the same, right around 13% there. Now, a 20% pre-election year equals never lower on the election year itself. And so I'm not going to beat a dead horse too much, but once again, guys, 100% of the time via this data, we are green. So, I know the bears are going to tell you that there's a million reasons that the stock market is going to crash. Whether or not we head tremendously higher from here is another story. Okay, maybe we just trade sideways even for the rest of the year. A lot of the data suggests that the later half of the year, we're going to see a strong rally. But, in my eyes, I'm definitely not looking for a stock market crash. I'm not looking for a 20% pullback in the market. Okay, the odds just don't really seem to favor that. A lot of the data doesn't seem to favor that. And, these are things that I just want you guys to consider, right? It's not technical analysis based. It's not fundamental analysis based, right? We're not looking at a RSI and saying, hey, things are overbought. When you're overbought, typically you have a pullback. We're not looking at PE ratios and saying, oh, well, valuations are too high right now. They need to come down, right? We're just looking at what happens, what has happened in history, and based on certain events. And in this case, we're breaking things down based on elections, and Democrats, Republicans, a new president, sitting president, different things like that. And it all points to green. It all points to a positive stock market this year. And this one we've got is where did President Biden's first 3 years rank? Well, out of 21, he ranks number 11. So I mean, Bidenomics, I guess, is a wash, right? It's not the best, it's not the worst, pretty much right there in the middle. So make with that what you want. But the average first 3 years on average is about a 28% return. 76% of the time, it's positive. You can see Joe Biden got 21% here. So, nothing stellar, nothing crazy. Uh, Shout out to Roosevelt. Okay. Roosevelt, Dow return first 3 years in office, 192%. Okay. Roosevelt smashed it. Roosevelt smashed it. So maybe they need to put him on the $100 bill instead. Now, stocks tend to do better under a Democrat as president. Take that how you will. All right. One reason possibly for this is, Democrats tend to spend a little bit more money, right? In Congress and the House of Representatives and different things like that. They tend to stimulate the economy a little bit more, right? And Republicans tend to be a little more conservative, right? And hence, also a little bit more conservative with the money, right? If there's more money pumping into the economy, being printed or stimulated through the economy, oftentimes being that the U.S. economy is 70% driven by the consumer is going to see some of that money, and they're going to spend that money often, and help drive the market continuing to go up higher. Now, a split Congress tends to be best for stocks, right? The average S&P 500 return with a split Congress is 15.7% versus a unified Congress is only 8%. Okay, so I think that that's pretty interesting right there. We'll see how things turn out. Stock performance based on the Congress makeup. Okay, we've got a Democrat president here. All right, with Democratic Congress, 8.6%. When you've got a Democratic president with Republican Congress, that's actually the largest returns, 16.3%, and then split 15.7. And we've got a Republican president here. You see lower on all three sides, right? We've got a Republican president with a Republican Congress. It's at 6.7%. Republican president with a Democrat, 4.9%, and then split again here at 13.7%. Now, it's the economy, stupid. Why does it say that? Well, recessions hurt presidents up for re-election. Okay. Donald Trump, 2020, we had a COVID recession. Did he get reelected? No. Right. Now, we're not going to go into conspiracy theories about, elections and, results, anything like that. We're taking a lot of that out there, and we're just looking at one simple data set of recessions, right? And you can see many of these presidents here, whenever there's a recession, they don't get reelected. Okay. No recession, they get reelected. Okay. So, it's very possible based on this data set, you may potentially see Biden win. And we talked about how the stock market often can predict, whether or not the incumbent is going to win. Okay. So, these are just some things to consider. Okay. I'm not going to focus too much on that. I'm more interested in returns and probabilities of a green market this year. Now, hopefully you guys enjoyed today's video. If you did, smash that like button, subscribe to the channel. Don't forget, if you want all of my analysis, all of my trade ideas, you can sign up for the Discord. Okay, it's only $10 a month. Lots of really good plays, over 20 plus swing trade ideas at least every single week. So giving you guys lots of things to choose from. I'm not just posting NVIDIA in there, right? And posting NVIDIA 20 different times. I'm going through many different sectors of the market, a lot of places that people aren't looking. Okay, finding some of those hidden gems. Also going over plays to hedge. Hey, maybe you have a lot of exposure in tech. Hey, these are some energy names that look good right now. Okay, if you're heavy exposure to tech, one way you can hedge yourself is through a little bit of energy. So I've been posting a lot of energy plays right now, just in case energy breaks out and starts to rally. Well, there's the potential that can cushion some of the downfall if some of your tech stocks start to pull back, right? Different things like that. All right. Now there's also the newsletter. You guys can sign up for that. It's completely free, or you can just check out the website, review the newsletter, look for new ones to be posted, however you want to do it. And if you enjoyed today's video and you know, you basically want to leave a tip or donation for the free valuable content that I put out, such as the newsletter, such as these videos. You guys can click on this little buy a coffee button on my Ko-Fi page. There's a link in the description for the Ko-Fi page. You can also click on this commissions tab here. In there, if you ever feel like you want that one-on-one session, or you need that one-on-one personal touch, you can reach out to me. You can book a one-on-one session. All right. They come in 30-minute or 1 hour sessions. All the Discord members do get 20% off of those. And if you ever wanted to do or you ever want me to make a YouTube video on a topic of your choice, whether it's a deep dive on a stock, whether it's a specific strategy, or something you want me to cover, you guys can also just request that here on my Ko-Fi page under the commissions tab as well. That way it doesn't get lost in the YouTube comments. Now, thank you guys for watching. If you enjoyed today's video, smash the like button, subscribe to the channel for more, and most likely you're going to enjoy this next video here as well. So be sure to click on that one.